Part B is briefly explain to the accountant what the implications would be on the 2019 taxable income of Hyperion if the amounts were paid on the 1st of October 2019 as indicated. Okay, so you'll recall from Part B what happened here is this is where the accountant came to us in 2019. So this is basically just assume that during the year they came and they basically asked us some questions. It's just to show if you have the skills to give advice. So simple, guys, 7 marks. So on the 1st of October, they want to pay short-term insurance and rental. All right. So let's quickly talk about it. So the first thing is we need to decide where are we going to be claiming and what section is applicable here. Now the very first thing that most students will jump to, section 23H, to talk about the prepaid expenditure. But what does section 23H talk about? Section 23H talks about our section 11 deductions, amongst other things, but section 11 is one of the important ones, where it says to you, the deductions that you claim in section 11 will be limited if they are prepaid, blah, 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 blah. So what I'm actually trying to show you is we start with section 11. Now, I'm not going to write everything out. This is the solution that's been typed is my solution also, guys. So please do open that up if you need to while you're looking at this. So basically what we're going to do is you talk about section 11A. Section 11A and section 23G together, you'll remember, makes up the general deduction formula, which says if you are carrying on a trade, and you'll always put this down in exams, so you'll say, I have to consider say, the general deduction formula, which says if you're carrying on a trade, expenditure plus losses actually incurred during the year in the production of income to the extent of trade. Well, it's actually before we say to the extent of trade, excluding capital, ones that are capital nature, and to the extent of trade. That's the part of section 23G. Now, in this case, if this was asked in a calculation question, you would have immediately deducted short-term insurance and rentals. Why? Because all of these requirements are met. You don't even have to discuss this. You'll just say, this is what the general deduction formula says, and the insurance and the rentals both meet all of those requirements. So they may be deductible. So thus, may deduct under the general deduction formula. So now you've stated that. So you've gone and said, yes, we can apply section 11. Now let's talk about section 23H. Now, what does section 23H say? Section 23H says, you may not deduct prepaid expenditure unless, and these are the provisos that tell us this. So proviso AA says the prepaid is not for more than 6 months. That's the first one. And then we have BB, the prepaid more than 6 months, total of all, I'll be just paraphrasing it, does not add up, does not exceed 100,000. So remember what we do. You first look and identify everything that is less than 6 months. Now I'm going to remind you, for the insurance was 3 months in the current year and 9 months prepaid. Now, we said already over here that you may deduct the amounts under the general deduction formula. So in your solution, I'm not going to write it down, but you will obviously address it. You must, there's a mark. You will say that you can deduct the 45,000 rands because that is for the current period. Right, everything in the current year, that is what you discuss under the general deduction formula, which is also why we have to discuss it, obviously. The next one is the prepaid expenditure. Now, the insurance has been prepaid for 9 months. So this first one, where it's for not more than 6 months is not available. So we have to go and look at the next one. So the next one says you must look at everything that is more than 6 months. Now, first we have to just identify all of our prepaid expenses. Rental is only for 5 months, so that's not applicable. So this is the only prepaid expense that we have that's more than 6 months. You look at the total of all of these ones that are more than 6 months. If that exceeds 100,000 rands, which it does, then you can't claim a deduction. So this information over here, the insurance, this prepaid, no claim in 2019, you'll claim it in 2020. And you'll see that's what the solution talks about. The rental is for 5 months prepaid. So we can claim the prepaid rental of 1.25 million. Now, make sure you see, I expect a number of students to make the mistake where they would have said that 1.25 million is more than 100,000, therefore it can't be deducted. Remember guys, that rule is only applicable to prepayments which are for more than 6 months. When it is less than 6 months, the amount is not a factor that we consider. You just claim it as a deduction. Right, then part C. We want to know if this loan, the interest on the loan payable, will be allowed as a deduction. Okay, so briefly explain it to the accountant. Okay, so guys, if we talk about part C, so what happened here? This is where we took out a loan of 2 million rands to buy 80% of the shares in Supreme Limited. Now, I'm going to talk about it quite quickly here because it's nicely laid out in your solution, and this is a straightforward theory section. I've included this because a lot of students would have overlooked this section, so it's one of those tricky little ones which you might have overlooked, but which does form part of your syllabus, right, and which we all discussed. So there's a couple of easy marks to get here. So the first thing I want you to see is you will calculate what the interest is that has been charged. Now, this is from 1 June until 31 December falls in our tax year. That is 214 days, and that gives us prepaid expenditure of 117,260. Right, so you'll get a mark for just calculating that. Then you'll get a mark for discussing or indicating that this dividend that they'll receive of 100,000 rands will be exempt. Will be included in gross income and will be exempt. Okay, so those are all easy marks to get. Okay, that's already 2 marks at least there. Then, now you'll say, we'll have to discuss if this amount is deductible under section 11A, the general deduction formula. Now, if I just go back to our general deduction formula, which we did earlier, let's talk about it. We are carrying on a trade. It is an expense actually incurred during the year. Is it in the production of income? Now here, what is our income amount? The income amount is null. So no, it is not in the production of income when we just look at the income that it has generated. But then, just as a reminder, the court case name might have given you a bonus mark, but that's not the important thing. The court case was the Drakensberg Garden Hotel case. That case said, if you can prove that the reason for you for buying the shares is important and vital to your business, you can claim it. What was in the situation there again? Let's say there were 2 companies, A Limited, this is a company that runs hotels, and B Limited. This is a company that owns land plus hotel building. Okay, so A Limited enters into an agreement with B Limited where A Limited is renting the property from B Limited. A Limited then uses the land and the building, so A Limited uses that to run its hotel. So it says, this is now our hotel, you come and stay with us. They run it, charge guests, get all the money and so forth. B Limited receives rent. But now B Limited is running into problems, and this company is going to be closed and it might be sold to someone else. A Limited is now very worried because if they lose their relationship with B Limited, the new owner might not be keen to renew their lease. And if this land, if A Limited has built a reputable business by renting this land and this building, now they might lose the entire business. So what does A Limited do? A Limited takes out a loan and buys the shares in B Limited. Now, A Limited will earn dividends from B Limited, which will be again dividend 100 rands, let's say, and it will be exempt 100 rands. Cool, so that is still not in the production of income. But buying B Limited makes sure that this company can continue its existence, so it's vital to their business. So the Drakensberg Garden Hotel case, which was then A Limited, Drakensberg Garden Hotel, the court said, yes, we will allow you to deduct the interest because we can see that this is a business decision. Now the question is, in this case, when Hyperion purchases Supreme, is that also the case? So let's look at it. What do they tell us? They say Supreme makes smart kitchenware. They say Hyperion believes in its potential. They don't say anything here if you look about it. How is that going to affect? What do they say here? How is this going to make Hyperion's business better? There's nothing indicated. So this situation we just described cannot be the case. So is it in the production of income? No, it's not. Right, it's not capital nature, sure, and it's to the extent of trade, but you only need one of the general deduction formulas requirements to fall away for this to be a problem. So no, we may not claim it under the general deduction formula. But then section 24.0 said, if you incur a loan which has interest on it and you use that to buy shares, right, and they call it an acquisition transaction. An acquisition transaction is where a company uses a loan with interest to buy shares in an operating company and after that they are group of companies. Okay, so I know my handwriting is a bit bad there, but it goes. Acquisition transaction is when a company uses a loan with interest to buy shares in an operating company. And after that, they are part of a group company. So your requirements are here. A loan with interest, an operating company, and they must be a group of companies. So this is all straight theory, guys, from your notes. So, first thing is there a loan of interest in this case? Yes, because they will take out a loan of 2 million rands with interest to buy it. Is Supreme an operating company? Now there's a definition given to us in the Act, in section 24.0, that says an operating company is a company where at least 80% of its income is, or the amount it's received is income, and it's carrying on a business. In this case, Supreme is 100% an operating company because there's nothing that indicates its income is not taxable and it's a business. Then there must be a group of companies afterwards, and that means you must have, after this transaction, 70% or more of the shares. In this case, we will acquire how much? 80% of the shares. So all of these requirements are met. So if all of these requirements are met, the Act then says in section 24.0 that you can treat that loan as if it was incurred in the production of income. So if I take you back to our general deduction formula, here we said it's wrong. Section 24.0 says no, you can assume, so you may assume under section 24.0 that it has been met. So that means we've got that requirement, that requirement, that requirement, that requirement, that requirement, that requirement, and that requirement. All the requirements are met, so it means we can then claim the interest. And that is it for part B and part C.